I am a lawyer, but I am not necessarily your lawyer. The materials discussed in this podcast are for informational purposes only and should not be deemed legal advice. If you have a specific legal question according to your circumstances, then I encourage you to speak with an attorney licensed in your jurisdiction. Welcome back to another edition of Ag Law Today. We have Pat Dillon, ag lawyer extraordinaire from Iowa, back in the house. We're going to be talking about some financial issues affecting farmers. Pat, welcome back.
Nice to be here. Thanks.
And for those of you that don't remember, Pat and I actually co-authored a book, the New York Field Manual, a guide for New York farmers and food entrepreneurs. Pat Dillon wrote the Iowa version of that book. Pat, do you want to tell us a little bit about your book? That's, I believe, up for sale on Amazon still. Is that right?
It is. It's a field manual, Iowa Farmer's Guide to Legal Issues. It's really drafted for the non-lawyer to consider different things that come up in their operation of their farm entity, and they take a look at things, kind of give you a general overview. Maybe gives you just enough to know when maybe you ought to call a lawyer, but it's good general background. It's a play on, calling it a field manual is a play on the fact that I was in the Army, and a lot of things in the Army they called them field manuals. So that's where that name comes from. It's just kind of a reference tool. So.
You know, I didn't get that actually. I was thinking, the field farmer, the field manual. So
right.
Love that insight. So Pat, I'd like to talk a little bit about when clients call you or I, and they are having some financial issues with their farm. Perhaps they're over leveraged. What are some general options that particular farmer might have?
Well, first of all, I'd like to say that, I started practicing in 2004, and a lot of those phone calls came in, right? The first couple of years of my practice, because things were going well and we were in an upswing with the farm industry, and we're obviously not there right now. What I find is that we've got people that have forgotten some of the basics on farm financial structures and forgotten how the rules apply, and those people are just the farm operators. Sometimes they're the lenders, sometimes they're the creditors, because we're all dusting off our material. The older operators will tell you that we're going back to the 1980s. When farming was pretty ugly, and knowing what you can do and what your steps you can take are going to be the difference between maybe working out a rough patch or having to trim down more than you wanted to start with.
So what are some general options that somebody might have if, let's say, they've defaulted on the operating note, perhaps on the farm, and they're just not really knowing which direction to turn?
So the first thing is that to get in communication with the lender or the creditor, the ostrich defense does not work. You stick your head in the sand and just forget about this. It doesn't go away. A lot of times the banks and the lenders have been in that position and had the discussion with the client already, and maybe they didn't listen, maybe they didn't want to hear, or maybe they had some ideas that didn't come to fruition. They're waiting on, well, the market's going to turn and we'll get this fixed with a spring rally, or I'm gonna reduce the cost of my inputs, my seed, because my brother-in-law is going to give me a discount more than he did last year or whatever. And when those things, those quick fixes don't work, and you've got to the point where you've received some sort of notice saying, hey, 45 days to cure, hey, you need to come talk to us at once, or we're going to move to take collateral. The important thing is to get yourself a representative, get yourself a lawyer. And I realize I'm biased in saying that, but I can tell you a story here in a little bit about somebody who didn't do that and the trouble it's causing them. But get yourself a representative, sit down with them, be truthful with them. Hey, yeah, it turns out I've been lying to the bank and telling them that I was farming 400 more acres than I really am, and yeah, I've been falsifying my balance sheet. I really sold a couple of these tractors a year ago, and I haven't told the bank yet. You need to be truthful with that representative so they know what the actual thing is, what's actually going on. And then from there, it's a matter of direct conversations with the lender to talk about options with them, or whether or not there's some things that you as the debtor and or the attorney need to know. Hey, we can't highlight this stuff. It's going to get us into more trouble. Let's make sure that we don't shoot ourselves in the foot any further. So the first step would be going to the bank and say, hey, this is the reality. I'm $25,000 short on my operating note from 2018. And this is the way I'm going to pay it off, is that if you finance me for 2019, I'm going to be able to finish selling off this grain that I've got stored because I thought prices were better, and I'm going to sell it. So that's going to clean up all but maybe $5,000. And then I've got some excess equipment that I'm going to sell, but I'm the sale I want to take it to isn't until June. So don't foreclose on me. And, can you not change my interest rate to the default rate, because this is my plan and this is where I'm going to take it. And if you start with that process, I mean, that's a pretty easy fix, right? But communicating that with the bank versus, well, they'll get their money when they get their money. I'm going to take that to the sale in 3 weeks and we'll find out. All sorts of bad things can happen. And first of all, there's a default interest rate, which is going to be higher than your normal interest rate. That's taking money out of your pocket.
How bad is the default interest rate in comparison?
Well, it depends by state. And there's usually, you've got an operating note that's somewhere around maybe 6-7% are the ones I'm seeing now. You can go up to 18% on default in Iowa. Yeah, gets ugly in a hurry. And that is something that's totally within the control of the lender. They can say, okay, well, we won't turn you on default. We understand you got a plan here. We're going to keep you at the regular interest rate because it's only going to be another couple weeks. That kind of communication happens when the lender knows that you're trying to address the problem and that you're operating with them in good faith and credit. If they've had to go find where your grain sales are at, if they've had to go hunt you down and visit the farm to get you to respond to them, they're not going to be nearly as willing to participate in those kind of actions that they can take willingly. So that's the first step, is be upfront with them.
So with that being said, Pat, because here's the thing with agricultural law for the listeners, is that it really touches upon every kind of law. And, I myself don't really practice a law in this specific area like you do, Pat. And so is one of the first things that you do for clients is have them basically put together a balance sheet. What are your assets and liabilities versus what have you told the bank?
Well, one of the first things you want to do is see, what have they told the lender, right? Where they're at. What's your last certified financial statement? Because if you look closely on a well-executed financial statement by a bank that knows what they're doing, a lot of times it says, I certify under penalty of perjury, this is accurate to my belief, right?
Yeah.
So then though that wasn't accurate, now you've subjected yourself to maybe falsifying documents. If you fax those across to them or you send them across email, technically you're getting into some wire fraud and some things like that. If people want to get really ugly, I don't see that happening a lot, but it's there. So you want to find out what's actually on the ground and what you can work with. And in looking in that, when you look at the balance sheet, generally for liquidation purposes, the numbers that farm operators put on their balance sheet, when you're looking at a liquidation sale, you're going to cut them by 50 to 70%. And that's because at a fire sale or a forced sale, things are not worth what the willing buyer and the willing seller is at, because you're not a willing seller. You're a forced seller. So that's something to think about. Also, we have a tendency to overinflate things a little bit. I looked at a balance sheet the other day, and it was a half interest in a Farm All C, and they had it at $3,500 for half of it. Now, it could be the nicest, prettiest, shiniest Farm All C. I don't think it's worth $7,000. That would be out of line for what the market is, but that's what they've been carrying it on the balance sheet.
What suggestions would you have for clients for farm equipment? Like right now, I'm involved in a couple farm divorces, and I have a farm business divorce. And in both situations, I'm appraising farm equipment. Mm-hmm. Would you ever advise to your clients to appraise the farm equipment, to give that information to the bank, or how do you know exactly how much the equipment is worth? It makes sense to me that that the equipment's going to be worth a lot less probably than the book value in a fire sale situation.
Sure. A lot of times a lot of your farm operators are pretty well plugged in on what stuff is really worth. I mean, they, if they're not, the Tractor House, Machinery Pete, some of those types of sites. I mean, Machinery Pete has a subscription service you can use to actually look up and see comparable sales by area.
What's that website again, Pat?
Machinery Pete is the guy. He's been in successful farming for a long time, and he maintains an
Machinery
index.
Pete. I like it.
He maintains an index of sales by region and quality of equipment. And so I think you can follow him on Twitter. There's interesting pieces out there. But he can kind of give you an idea what things are selling for by your region, and that helps you get a better barometer when you're trying to get stuff figured out. Some banks will take a 10% depreciation per year on your equipment on the balance sheet to reflect that the machinery is devaluing over time. So there's things to look at. So making sure that balance sheet is reflective of what you can do with it, because when you're trying to go work with that lender and you come in and say, okay, well, I've got a line of equipment that's worth, I think it's worth $2 million. And so I need you to lend me $500,000 to clean up my ag input debt to the fertilizer company, to the seed, and so I can get them square, knowing that, number one, they don't think it's probably worth $2 million, right? And then number two, knowing that they're not going to want 100% loan to value on those things. It's going to be a lesser amount that they're willing to let go on or lease on. So I think those are important things as you look at that balance sheet, and being up to date with what you really owe people and who you all owe. There's a lot of these, well, I'll get you paid up later type of relationships people have with they're trading custom labor, or they're trading equipment back and forth. Having that information in advance and knowing exactly what's out there is super important. We find a lot of times I've got operators that want to protect the neighbors. They want to say, well, I'm going to get square with him. That leads into a concept that'll bleed over into bankruptcy rules. If you prefer a creditor, that is, you pick one creditor over the rest in excess of $600, the bank, and you end up filing bankruptcy, and within 90 days, that the bankruptcy trustee can go in and take that payment from that creditor and take it back, what they call preference action, and split it out between all your creditors of a similar nature. That is a difficult process, and it's irritating. And it turns out a lot of times what happens is that the debtor has to buy their way out of it, or the creditor that got paid something will buy their way out of it by saying, okay, the farmer paid me $15,000 for custom farm work in December, and he files a bankruptcy in February. The bankruptcy trustee is going to go in and say, I think he preferred you paying that $15,000, and the preference action gets into things like, was it the normal course of business? Was it usual that you'd be paid that late after you performed the services? It gets in all these weedy details, and a lot of times what we find is that the custom farm operator can't afford the litigation expense, and so they'll buy their way out of it by saying, well, bankruptcy trustee, I disagree with you entirely, but I don't want to pay my lawyer a bunch of money to tell you how much I disagree with you, so here's $5,000. Go away. So that you really help your farm neighbor by preferring to pay them and then filing bankruptcy shortly thereafter, right? So we need to be aware of that as you come along, that these transactions and decisions you make have a longer tail on them than just, I'm going to give up farming today, so whatever I do, you gotta have a window and go look back a little bit too on things.
So with your experience, how cooperative are financial institutions for refinancing or working with the producer if they're over leveraged or in default? And to piggyback on that question, how badly does it affect things if there is acrimony, either within court or outside of court, among business owners? Perhaps the business owners are family members or not family members.
I think the willingness to restructure and work with people comes down to, is this a workable plan that makes sense, and can we get you out of it, and are you willing to step up and commit the resources to a project that need to be there, whether it's you or your extended family members or other business partners, whatever. When more people are willing to put skin in the game essentially and say, yeah, this operation can come through this, certainly the bank's going to be more amenable to saying, okay, well, we're adequately secured once again. We've got another 60 acres pledged here from grandma. So now we're okay. We'll let you continue to operate here. Those kind of things, those relationships saying, yeah, okay, we'll change our operation. We're going to sell 80 acres and we use all the principal that we generate off that sale. We're going to use that to reduce debt. That puts our asset ratio back in a better position. So don't take any more action against us if this, those kind of things are helpful. When you get acrimony, when there's been lies and there's been misrepresentations, then loan officers are people too, bank officers, bank boards are people too, and it's hard for them not to have that filter across things and say, listen, this guy's a crook, this gal has lied to us about where she was. I've heard stories about a borrower that kept representing that her husband was sick and she was by his side, and that's why she wasn't bringing back all the information for the bank to decide whether or not they could restructure the loan, and just give me a little bit more time. Well, allegedly, while she was at the hospital with her grievously ill husband, one of the loan officers was at a wedding, and who was at that wedding but the distressed farm operator and her husband dancing away. That relationship goes south in a hurry. There's no trust there. And it makes it, then it's a worry of, well, I need to take, from the lender's standpoint, they got to take what they can take and minimize the loss, and rather than continue to throw more money or more problems at this and just let it mushroom.
Right. That's good advice. So our listeners know that I am a mediator. I love mediation. I'm a big fan of alternative dispute resolution. Do you see mediation in this context between the debtor and the lender?
Yeah, actually in Iowa, it's required if it's an ag-related loan, you've got to submit with the Iowa Farm Mediation Service and get a release before you can pursue legal action against a debtor. And so, but that mediation sometimes is a matter of, hey, they'd like to meet, they've made the request, do you want to show up? Yes or no. If you say no, that's the same as going to mediation. So it's getting a release. Likewise, the debtor can say, I want to mediate this, and the bank can say, well, that's great, we don't want anything to mediate. Our mediation position is write a check. Then they can get the release. But there is a process that goes through, it at least gets people to the table. We have had some success with that neutral mediator developing a plan and saying, okay, you agree that we have until November 1st to voluntarily liquidate what we need to liquidate, and we're going to make a payment of $40,000 by September 1st and another $25,000 by 1st of November. Those type of arrangements, those are remedies the court can't fashion. So there's value in doing that, and there's value in getting everyone to see and try to get things through. This morning I was talking to a gentleman that he is convinced that the banker is out to get him personally. I don't necessarily know if that's the case, but he is absolutely convinced of it. And he's got to the point where they don't really want him in the bank anymore. Like you could, so that they're dealing with emotions there, and that mediation can help pull some of that back out, gives you a little bit more structure, gives you, a chance to talk with people through a process and get there. So that mediation is absolutely important. It's important that all the stakeholders that can make decisions be there. A lot of times you'll have loans that are guaranteed through the Farm Service Agency. Better make sure they're at the mediation as well, whether it's through the mediation service or whether you're doing it informally, because a lot of times the lender, the first line lender, is beholden to what the Farm Service Agency is going to do on the backside. So you might as well have them there to try to get to the total solution, rather than, well, this sounds really interesting, I'll go carry the water essentially and find out what happens.
Yeah, my biggest pet peeve is I hate it when people just say mediation's not going to work, we're not going to budge on our position. Well, that's fine, but there's value into just having that conversation and letting the other party look you in the eye, or via Skype or however it's done, and hear you out of your voice say those words. And like you said, emotions could be involved. A few months ago, I had a over leveraged client contact me, and the dispute was with him and his father and the bank. And I can't think of a better use of alternative dispute resolution when we're talking about family members. And, so I certainly encourage people to explore that if it's an option. Along those same lines, Pat, for FSA loans, when does the agriculture mediation come into play with that? Like when somebody gets, let's say a farmer defaults on an FSA loan, when can they get in contact the state agency and say, hey, I want to mediate this with the USDA?
The same process works. You can contact the mediation service and say, hey, I'd like to get this worked out. You can also contact the FSA directly. They're, at least in this area, they're very responsive, and they want to work with you and figure out what it is. They've got some obligations when there's a debt that's owed to them to service it, and look at the alternatives on how it is they can help the debtor get out of that situation. If everything goes bad, in the worst case scenario, I'm looking at one right now where the operator has a loan through a local bank, and that bank has been guaranteed by the FSA. If the bank is not able to fully recover on that loan, they're going to turn to the FSA and say, hey, we have a 90% or a 95% guarantee here. Mm-hmm. Our loss is $100,000. Please, we need our $95,000. Fine. The FSA, by statute, then can go back on the debtor for the difference to pursue them through wage assignment, through other assets. That's a terrible position to be in when you think you've got it resolved with the local bank, and then you're not, because the FSA comes back around and can seek contribution from the debtor for the guarantee they paid off. Take income tax returns and things like that. I've done some research on it. Anecdotally, there are cases where they do pursue it, but what they want to look at and see is, did the debtor fully exhaust everything and play everything out the way it should have been? And it's just, sometimes a bad deal is a bad deal, and they'll leave it be. But if you've got someone who, for example, dairy cows have really taken a beating on price recently, and we've got a lot of dairy operators that maybe 4 or 5 years ago were big into flushing cows and embryo transfers, and we're carrying critters at $2,500 a head that if you were to run them across the scale today is $600, $700. Mm-hmm. So if that happens, and you borrowed money based on the $2,500, and then you have to sell them, and you sell them at $700 on the open market, and that's what it brings that day, and the FSA knows that you were doing that, and the local bank knows that that's what you're doing, and they say, yep, that's a commercially reasonable event, that's fine. The likelihood of them pursuing you, because you probably don't have any assets at that point anyway, it's quite a bit smaller than when it's, well, I was carrying these at $2,500 a head, but my buddy said that he'd buy them from me, so I just sold them to him for $800 a head, and that's about what the market is. And you guys can hang it on the rest. That's a little bit more suspect. And then, now I also took a job in town, and I'm a consultant for a feed company, and I'm making a bunch of money. Then there's the FSA is going to start looking at that a little differently. From what I can tell, is that it doesn't look like it's commercially reasonable, didn't make the best efforts to sell. Those things, that influences how they're going to approach it, from what I can tell.
So when do you recommend to your clients that they think about bankruptcy, from farm bankruptcy?
So I know in the I states, Illinois, Indiana, Iowa, we are, as a society, distrustful, distasteful, don't like bankruptcy. Like they'll rather work 2 jobs and spread themselves too thin than to do bankruptcy. But the reality is that bankruptcy is there. It's written in our code as a relief mechanism. And my little spiel I do on it is, if you're a religious person, it says once every 7 years, forgive somebody their debts, right? And for a long time, bankruptcy is you can file once every 7 years. That's no accident. Number 2, bankruptcy is not in the Constitution. We made it up. We did it. The United States said we want people to take risk. That is, and we want people to borrow money and do good things with that borrowed money and leverage those assets. No one would do those things if they knew that the first time they failed, they got a 100% payback responsibility at all times, underneath all circumstances, right? So bankruptcy allows our economy to grow. And then my last bit I talk to people about is if there wasn't bankruptcy, because we know debtor's prison doesn't work. Let's see further Australia, right? It doesn't work. So if there's no bankruptcy, what happens to you is you're going to go in the cash economy. If you go in the cash economy, you're not paying taxes for what you're doing. So then the roads suck, right? And then I got potholes to drive over. And then if you're in the cash economy, you're going to not report. You're going to tell other people they're not going to report their income. There's more tax revenue gone. That means the roads stink even more now, right? Mm. And then also, we have a tendency to punish ourselves and deny ourselves basic things that keep us mentally up and happy because we've got this debt looming over us. In Sumner, there's a $1 movie theater. And I can ask the local people when they come in to do bankruptcies, if they've been underneath of it for a while, when's the last time you went to the movie? Well, I can't afford to go to the movie. That's not right. I've got all this debt. Well, it's $1, first off, right? For 2 hours. In the greater scheme of things, $1 is not going to kill you. To get a little mental health break. But by them not going to the movie and spending that $1 and not buying the popcorn, then there's some pimply-faced kid that doesn't get paid, right? A pimply-faced kid doesn't get paid. He can't buy a car. If you can't buy a car, there's a car dealership that doesn't get a salesman that doesn't get a commission. You can see the collateral effects of all. So now that my spiel is over, but they come in for bankruptcy when we feel like it's insurmountable and it's not a reasonable chance to pay back. We looked at a client came in, we looked at a refinance package that the bank had put together, and it was a good faith bank effort, and I applaud them for the work they put into it. But the guy was going to be 67 years old. He was going to have a facility that was consumed and exhausted after there's going to be another 20 years of dairying. He was going to be physically wore out, another 20 years of dairying, and he was still going to owe $600,000 on that facility in another 20 years. What are we doing? Yes, I know you like cows, but there's other ways to like cows. So those are the things we look at as what are we doing here? Can we ever? It's one thing to say, okay, I'm in the whole $80,000, but I got a bunch of stored grain. I can trigger some of that. I can get some of this worked out. I can sell it. Yeah, I'm going to be short some, but I can work that back in, and I just gotta have the bank rewrite $25,000 over the next 2 years. That's different. But
Pat, for our listeners and for me, could you maybe describe briefly how the bankruptcy process works?
Sure. So there's different chapters, and then what those chapters refer to is what part of the code they come in. So the one most people are familiar with is a Chapter 7, which is a liquidation. Each state essentially gives a list of things that someone can have for what they call the fresh start. In Iowa, you can have $1,000 in your bank account. You can have a car with $7,000 worth of equity. That means you can have a $20,000 car and owe $13,000 on it, or you can have a $7,000 car. Doesn't make a difference. You can have your homestead of unlimited value in Iowa. Not every state's like that, but you can have a rifle and a shotgun and you can have your everyday wearing expenses.
So if your homestead is on a 200-acre farm.
Well, it's generally 40 acres is what the homestead, they'll chip in at you on that. There could be quite a bit of value in a homestead that's exempt. Now, most of the time, reality is there's a debt against that. That's what got you in trouble in the first place, right? So but the homestead equity, if you owe the bank $250,000 and it's a $312,000 property, that equity in there is not something you have to liquidate before you can file bankruptcy in Iowa.
Okay.
So, and then you get like $10,000 tools of the trade. So like if you're a plumber and you've got all your plumbing stuff and your tools, and you don't owe any money on those tools, you don't have to sell those in bankruptcy. But if you've got a Harley Davidson and you've got a pair of jet skis, and you've got a lake home, those kind of things you're going to have to get rid of in the course of the bankruptcy.
Is retirement shielded? For some reason, I was thinking it was. I think I've listened to too much Susie Orman. But
yeah, retirement accounts in Iowa are protected. And whatever's in that retirement account is not going to be compromised by the bankruptcy. So that's a 7. That's a liquidation. That's a, hey, everybody, I can't pay. This is my stuff, and I'm underneath the limit. The bankruptcy trustee looks at it. They do a short hearing to make sure that no one can come out of the woodwork and say, well, it turns out actually he told me he's got all this gold coin stacked up and I've got pictures of it, and where is this at? That kind of thing.
And what does that look like, Pat? I mean, does somebody put an ad in the paper and say, we're having an estate sale, come get my jet skis and everything else like that?
You try to get rid of it in advance. So when we file a bankruptcy, we want it to be a smooth, easy process on a 7. We want to have already identified, hey, we think you've got too much junk, right? Let's get rid of your junk. And then generally we convert those non-protected assets into protected assets. So if I've got a jet ski and it's worth $2,000 and I don't owe any money against it, I'm going to sell that, and I'm probably going to use that to pay my bankruptcy attorney, right? You turn that into your fee. You've got a lake home that, there's maybe $20,000 worth of equity in that. You sell that, pay the taxes, and then move that money to pay down the mortgage on your homestead, because then it's exempt, right? So you pre-bankruptcy planning there with a 7. But a liquidation is fairly routine, doesn't take all that long to get. So that's a 7. Now in the farm context, there is a chapter 12, which is a farmer or fisherman only provision that says, hey, you can have $4 million and some change of asset, and then we'll give you some protections and allow you 3 to 5 years to reorganize your debts. And
Pat, sorry to be wearily here, but it's what I do. So how is a farmer defined under that chapter?
You've got to have so much of your gross revenue coming from the farm operation. So it can't be that you racked up a giant gambling debt because you're playing poker online and you maxed out your credit cards, and then you also have 20 acres that you raise hydroponic tomatoes on and give them to your friends. Those aren't gonna. If your main source of revenue is not farming, then that chapter is not open to you. The 12 is not. So.
And in terms of farm leases, does it really matter if you are a landlord versus a tenant farmer in that situation?
Yeah, I think that the 12 is designed for the active farm operator, not for the landlord. Now, if the landlord is a material participant underneath the crop share, then they're probably a farmer at that point anyway. So,
okay.
So there's a difference there. But a 12 is a plan where you go into the bankruptcy court and your creditors and you say, listen, yes, I'm in trouble, but by the end of 5 years, look what I can do here. These are my projected corn sales. These are my projected dairy milk proceeds. This is the government payment that's been announced that'll give me a shot in the arm or whatever it is. Show this is the plan over the next 5 years. And I'm going to put, in the end of 5 years, all my secured creditors, those people that lent me money for specific things, they are going to be in the same position as if I filed a Chapter 7 and got rid of everything today. So that's it.
So, by the way, I have an agribusiness client who's owed some money, and the person that owed them money was in bankruptcy.
Right.
Can you walk us through sort of the other side about filing a claim against somebody who's in bankruptcy court?
Sure. So first of all, when you get a notice saying, hey, farmer has filed bankruptcy, you need to stop all your activity that you're taking against them. That means no more collection letters. Don't call them. Don't text them about that issue. You need to stop, because the federal government has an automatic stay under the bankruptcy provision that goes into effect. It's essentially a blanket order saying no creditors can take adverse actions against the debtor until we've had this meeting of creditors and we've decided what needs to happen there. Now, if you're in the middle of something like a foreclosure, an auction or something, and somebody files a bankruptcy, the response is you could go to court and pay a filing fee and ask for a relief from that automatic stay. Say, hey, essentially go to the bankruptcy court and say, yeah, I know there's a bankruptcy going on, but we're foreclosing on this property. There's no equity in it. There's no reason to stop it because there's not any extra money coming out of this anyway. Judge, can you let us continue? And then the bankruptcy court would allow you to continue your collection activity there. But absent that, then what happens is you get this notice, and then depending on the type of bankruptcy it is, whether it's a 7 or a 12, the court will tell you, hey, you can file a claim or you can not file. There's no reason to. They will invite you to file a claim which says, hey, tell us what you're really owed. This guy says you're owed $25, right? That's what he got listed. But it turns out he owes you $2,500. you'll submit your claim through a lawyer, and you file it into the PACER system, which is the federal electronic filing system, and you get indexed as a claimant. And then what happens is if there's money available for the class of claim that you are, whether you're secured by a piece of property or whether you're just an unsecured creditor like a medical bill or a service provider or something like that, they'll put you in a category, and then they'll say, okay, in this bankruptcy estate, we found out that he didn't tell us about his $30,000 worth of CDs that he had. So the bankruptcy trustee takes those. Bankruptcy trustee gets a fee for finding those assets, pays the attorney for finding the assets with him, and then they take what's left and they divide it up pro rata between all the claimants who filed. So it's usually pennies on the dollar is what you get back out of it. If you think that there's been some fraud or some shenanigans going on, you have the opportunity to file claims in that regard as well, and go in and say, hey, this specific transaction is fraudulent. It should be exempt from the bankruptcy discharge. For example, representing a bank, and the bank says, this guy told us he was farming 1,000 acres and that he had 20,000 bushels of corn on hand, and it turns out he's only been farming 400, and he's lied about those those bushels on hand. They could technically go in and do an exemption to the bankruptcy discharge and say this debt remains valid because it was incurred fraudulently. So there's a couple different options for people.
Got it. And generally speaking, obviously I know it will differ depending on what chapter you're filing under, but how long does the bankruptcy process take? Like, for example, how long was a liquidation under Chapter 7?
So once you file a Chapter 7, you generally get what they call a meeting of creditors within 6 weeks. And that is a chance for creditors to come in and ask a couple of questions. If they ask too many, the trustee is going to say you'll have to set up for a separate hearing. But generally, that meeting of creditors goes pretty quick. And here in Iowa, they run 5.5 an hour. So it's have you sold, transferred, given away property? Have you made a complete listing of all your debts? Just some real basic questions, because the trustee's done the homework in advance to check things. There's a trustee around here who checks Facebook to see what your equipment, I mean, if you've been posting pictures of all your equipment that you have, and then when you go to bankruptcy and you say, I don't have any farming equipment, she'll ask, like, what are all these, shiny green tractors here, and where they come from?
People need to be careful about that social media. I actually included on my retainer, I have a social media acknowledgement asking for them not to talk about any of the litigation, but I need to be thinking about what they have in their pictures too.
Yeah, so but they'll look at that, and then so that's within 6 weeks, and then following that meeting, there's a 60-day window where a creditor could come in and object and say, hey, Pat shouldn't get a bankruptcy discharge because he lied to me, or Pat shouldn't get a bankruptcy discharge because his schedules are all wrong, and whatever it is. And then once that window closes, as long as you've done the other things the bankruptcy court requires you to do, or the trustee has asked you to do, then you'll get a discharge. And so it's a pretty quick turnaround process. Clients sometimes get new credit card offers before the bankruptcy is even closed. So, and I guess their thought process is you can't file another one for 8 years, so they're going to get,
Oh, right. Wow.
So, and they also sell it as we're going to rebuild your credit with you type of thing. So, but that's the 7. The 12s take a longer time because you've got a time window on providing a plan, but then the plan has to get confirmed, and then it gets monitored for a period of 3 to 5 years, depending on what your plan is. So you can be in 12s for a long time, and then if your 12 fails, they discharge you out of the 12, and then or sometimes if you're not behaving, then they'll move you to a 7 for liquidation.
And how bad does bankruptcy really ding your credit?
Those are all private companies. Those numbers, they're not publicly regulated. They're just those 3 companies make those numbers up. I've had clients.
FICO, you mean? The
FICO
score? Yeah.
Well, it is what I mean. Experian, TransUnion, all that stuff. That number is just a number, right? It's not federally regulated. But what I've found in practice is for about 2 years, you're not going to be able to go open up a Furniture Mart credit card or something like that. But after that, clients are generally extended a little bit of credit and they move forward. Getting a loan through a national loan company will be difficult for a while. But buying a house on contract, for example, still people will do that. I mean, that's an individual deciding if they want to take the risk on somebody buying. So as credit goes, it's a damage, absolutely. But I've seen a lot of my clients come back from it better shape, shinier cars, and whatever else. So
yeah. So I think an ounce of preventative medicine can go a long way. Do you give clients any advice prior to them having these financial problems, just in general, or maybe they're on the way of getting financial problems? What can they do to sort of stop it before it gets out of hand?
Communication is the big thing, and get to the bank and get to that lender early and say, listen, I messed up my marketing plan this year. I didn't hit the rally, right? I didn't sell when I should have. I know I told you that I was going to sell when corn got to $4, but I waited for $4.10 and it never came, right? So now corn's at $3.85, and I'm going to sell now, but I'm going to be short. Let's talk about how I make up that 15 cents a bushel. That makes a heck of a difference. Going in with a plan the banks can't tell you how to farm. That crosses the line. They cannot take over your operation because that'd be bad faith on their part. But you can show them what a reformed operator you are. Hey, listen, I'm gonna start. I'm actually gonna listen to the market guy that I subscribe to, and when he says sell, I'm gonna sell. I agree that the first so many bushels of corn I'm gonna forward contract, or I'm no longer I'm gonna start putting puts in my marketing plan. Whatever those things are, you can tell the bank in advance. That puts that loan officer in a better position because he's going to have to report to a loan committee or a bank supervisor of some sort, right? To say, hey, what's going on with Pat's line of credit here? I see that he was 15 days short on that last payment. Yeah, those cattle were light, so he waited an extra 15 days to sell them because he had some problems and because the shed blew down or whatever it is. Okay, you don't get on the loan watch list as quick, but when I don't know, I haven't heard from him in 90 days and now he's late. Okay, that's bad. I think the other thing is going back to taxation. The income tax return is designed to do one thing, and that's to generate revenue for the government. And then it's designed to do another thing, which is to modify our behavior, right? If we want more kids in America, we make a child tax credit. We want more purchase of equipment, we make expensing stuff work better. But what it doesn't do is it doesn't substitute for financial analysis. A tax return is not a great document to base I'm a successful farm operator on or not, right? Mm-hmm. It's not. One of the problems by being so beholden to the tax return and playing the game of I want my taxes down, I don't want to pay a bunch of taxes, is that we buy a piece of equipment in 2012 when things are good, right? And we put it on a 3-year note. And then we expense it all out in year 1 to shield all the income we made in year 1. We still have to make that payment in year 2 with income now with no expense against it. Well, that's fine because I'm going to buy something else, and that doesn't work. And now things are bad in 2015, and I got a payment I can't make because I should have made this payment. I should have set this up over 7 years to begin with, and I should have expensed it out over 7 or 5, and I chose not to. So being aware of the decisions you made 2 years ago, and how that impacts your cash flow, and because you can't always go back and change all that stuff. You don't get do-overs like you do on the recess ground. So
yeah, I think absolutely working with an accountant that really understands production agriculture really goes a long way for sure in that regard. All right, Pat, so to kind of wrap things up, we've got listeners from coast to coast. First of all, how can people find you? And then secondly, if people are looking for a good ag lawyer in their community, somebody who understands some financial concerns that farms are experiencing and the legal mechanisms to mitigate that, how can people find the right partner there?
Sure. So I'm at DillonLawPC.com. I've got a website. I've got some of my musings are up on there on some blog posts and some other stuff. But regionally, nationally, the American Agricultural Law Association is a great resource. There is a member map on there that you can go in and kind of look at your area to see where it's at. And you can find people that are connected to agriculture in your community. And a lot of times those ALA members, if they don't participate in that specific portion of the law, they know somebody that does, or they can ask the executive director to help them guide you to somebody. The last conference we had there was one out in Portland, and they had some presentations on stone fruit financing and how that all works. And it's interesting, just as an aside, the lender who lends against the tree is like the operating note guy. And then you've got the lender that lends against the ground. She's like the real estate guy, right? So, but you need them to work in concert with one another, because if there's a foreclosure, who gets, I mean, you can't just cut down the trees and move them someplace.
Yeah,
right?
you're right.
So, and then who can actually harvest, and who knows, see the debtor who's been running the operation, and then what happens to those proceeds? Do they go to the land payment lender? Do they go to the, so they get very specific. That's something that I know I'm not going to get deep in the weeds, but I know there's people out there that do that, and you know, we can get them pointed in the right direction. So
yeah, I think AALA is a great resource. You know, just yesterday I was having a conversation with my associate. We're trying to get a subpoena out in North Carolina, and I told them to go to AALA's website to find local counsel in around Durham. So thank you so much, Pat, for all of your insight here on the financial difficulties that some farmers are experiencing. And again, what's your website for our listeners?
it's Dillon Law, DILLON lawpc.com. So happy to be on and tell some stories. So
all right, that's a wrap. Until next time, thank you.